Hello students, already you have learnt what is chargeable under the head salary and chargeability of income under the head salary, and then some of the features of salary, like there must be employer-employee relationship. Both salary and wages are taxable under the head salary, and accrual and salary grade, application of salary, application of income rather. So like that, several features you have studied in my previous presentation. In this presentation, let me tell you further more information about income from salary. I am Dr. Pandurangan, Principal, SVS College, Bantwal. This is the second video under the head income from salary. Already I told you about the features of salary. Now let me give you present a chart here in brief that will tell you the gist of the computation of taxable salary. For example, first one is basic salary. Supposing the salary grade is 10,000 dash 500 dash 12,000. What it means is 10,000 is basic. Once you complete 1 year of service successfully, your basic will be 10,000 plus 500 increment, that will be 10,500. Once you complete the second year, your basic will be 10,500 plus 500, so 11,000. So that is nothing but basic salary. Then allowances. Allowances are paid to the employee by the employer in addition to basic salary, and that is paid in cash. For example, dearness allowance, dearness pay, house rent allowance, educational allowance, transport allowance, conveyance allowance, marriage allowance, high altitude allowance. So like that there are several allowances. So you have to compute the taxable part of allowances. Then the third one is perquisite. Perquisites are also like allowances, only thing is they are not paid in cash, but they are allowed to the employees in kind. For example, rent-free accommodation or concessional accommodation. For example, in the absence of the employer providing accommodation free of cost, the employee would have paid the rent to that accommodation. So that has got monetary value. So that is one example, perquisite. Perquisite is benefit to the employee in kind. Say car facility. For the employee, car might be provided with or without driver. So that's another example for perquisite. For example, free gas, electricity, water, etc. Or for example, domestic servants might be provided by the employer. Employer need not pay for that. So these are all examples for perquisite. Third one is profit in lieu of salary. Fourth one, basic salary, allowances, perquisites, and profit in lieu of salary. Profit in lieu of salary means instead of salary, some payment is made. That is called profit in salary. We'll come to that little later. Now next, if you add up all these four items, you will get gross salary. From the gross salary, you have to deduct deductions under section 16. So there are three deductions. One is standard deduction, second one is entertainment allowance, third one is employment tax. What is standard deduction? See, in the recent past, standard deduction was not there. Very recently, once again, it has been introduced. Earlier standard deduction was there, Then it was discontinued as far as salary income is concerned, and very recently once again it has been introduced. In the last year the standard deduction was 40,000 rupees, but for the assessment year 2021 the standard deduction is 50,000. So standard deduction allowed is 50,000. So that is deductible from gross salary. That's under section 16 subsection 1. Then entertainment allowance. Entertainment allowance is allowed to the employees and that is fully taxable. Then if it is allowed to the government employees, that is deductible. To what extent it is deductible? 1/5 of salary, that is basic salary, or rupees 5,000, or actual entertainment allowances. Of the three, whichever is the least, that is deductible under section 16 subsection 2, and this allowance is there, or this deduction is applicable only in the case of government employees. Third one is employment tax. So this is applicable to all types of employees, whether the employee is drawing very low salary or high salary. So this is employment tax under section 16 subsection 3. So if you deduct the total of these three deductions, you are going to get taxable salary. From gross salary, you have to deduct these three deductions, provided they are applicable to you. Then the net amount you get is taxable salary, and taxable salary will be included in the gross total income of the assessee. Thereafterwards, deduction under section 80, then you will get taxable income or total income. On that, taxes are calculated, and if there are TDS, then that will be deducted and the remaining amount will be payable as tax. Okay, once again summary of what I have mentioned. Salary means basic salary, taxable allowances, taxable perquisites, and profits in lieu of salary. From the total, then what you get is gross total salary, or gross salary, what we call. From the gross salary, you are deducting three items: standard deduction, entertainment allowance if applicable, and then professional income. Now this chart will give you the details of the items to be included under the head income from salaries. Salary or wages, it makes no difference whether it is salary or wages for tax purposes under income from salaries. Advance salary, that's also taxable. Dearness pay and dearness allowance, that is for increase in the cost of living, and to meet that, employees are provided with dearness pay or dearness allowance. Next one is bonus. Taxable, fees, commission, taxable allowances. All allowances are not taxable. Some allowances are fully taxable, some allowances are fully exempt, some allowances are exempt up to a certain limit. Taxable perquisites. Once again here, all the perquisites are not taxable, all the perquisites are not exempt. So depending upon the provisions, you have to find out whether they are taxable or not. So taxable part of perquisites. Then profit in lieu of salary or in addition to salary or wages. Okay, we'll come to that little later. Amount received in respect of encashment of earned salary during services. See, there are different types of leave, like for example, casual leave. Casual leave, that is for emergency purpose to the employees. So normally to the employees 15 casual leaves are available. If employee exhausts that, then he is not entitled to that casual leave. If he does not avail that, then he cannot carry it forward. Then there is earned leave. Earned leave means every year he earns some leave, and that he can carry forward if he does not avail. and once in 2 years or 3 years, something like that, depending upon the organization where you are working, that is encashable. I mean to say, a salary equal to the period will be given to the employees, and that is fully taxable during the service. Contribution of employer in recognized provident fund in excess of 12% of salary, that is taxable. And even interest credited to recognized provident fund in excess of 9.5% salary, that's also taxable. All these things you are going to study in detail later on. Then on retirement of employee, there are certain items which fall under the head income from salary. Unrecognized provident fund. Here share of employer as well as interest on share of employer. Both are taxable. Taxable part of salary. This is on retirement. And taxable part of encashment of leave salary. During the service, encashment of leave salary is fully taxable. But at the time of retirement, the calculation is a bit different. Entire salary and entire amount received on encashment of leave salary need not be taxed. If retrenched means removed from job, taxable part of retrenchment compensation, that is taxable. In case of voluntary retirement, taxable part of voluntary compensation received by the employee. Then pension, taxable part of commuted pension. Commuted pension means it is payable to the employee every month. But sometimes instead of getting the pension in installments, the employee may opt for getting the amount in one lump sum. That is called commuted pension. He is commuting the pension. Sometimes he may commute full pension, sometimes part of that. Normally part of that will be allowed to be commuted, and therefore that is taxable. Taxable part is to be taken under the head salaries. Then pension from the date of retirement till the end of the previous year. So that's also falls under salaries. So if you add up all these things, gross salary income you'll get. Therefrom, as I already mentioned, 3 deductions. Standard deduction at the rate of 50,000, this is the maximum amount deduction now applicable. Last year, that is for 1920 assessment year, the deduction was 40,000, but for 2021 the deduction is hiked to 50,000. And entertainment allowance, it is maximum 5,000, that is 5,000, and then 1/5 of salary, basic salary, or actual entertainment allowance, whichever is less. So normally 5,000. Then professional tax, okay, so it is applicable to all types of SSCs. So when you deduct the total of these 3 items from gross salary, then you will get taxable salary. And taxable salary will be included under the head gross total income. There are 5 heads of income. One of the heads is taxable salary. Okay. Regarding deductions, I was telling standard deduction available is 50,000 under section 16 subsection 1e. Entertainment allowance, this is granted to employees and that is fully taxable, included under the head salaries, but then the deduction is allowed in the case of government employees only, and the rule is amount received 1/5 of salary or ₹5,000, whichever is less. Professional tax or employment tax under section 16 subsection 3, this is applicable to all types of employees, whether the income is high or low. Profit in lieu of salary means a monetary benefit given to the employee in the absence of salary. It includes any compensation due to or received by an SSC, it should be SSC, from his present or former employer in connection with the termination of employment. So when he is removed from the job, he might be given some remuneration or compensation either by the present employer or former employer. Or modification of terms of employment. Sometimes due to certain circumstances, the terms of employment might be changed. For example, his salary might be decreased, or number of hours might be decreased or increased. So that way, any payment due to or received by an SSE from his present or former employer except by way of gift. Any payment made from unrecognized provident fund to the extent of employer's contribution and interest thereon. There are different types of provident funds like statutory provident fund, recognized provident fund, unrecognized provident fund, public provident fund, approved superannuation fund, like that. All these things you are going to study in detail. Any sum received under Keyman insurance policy. In an organization, all are equal, but one or two, a few, are very important. And insurance policy might have been taken on the life of such persons. We call that Keyman insurance policy. If any amount is received by the SSE under Keyman insurance policy, including bonus, that is falling under the head profit in lieu of salary. Payment made before joining or after retirement, whether the employee is received in whether the amount is received in lump sum, means at a time, or otherwise. Any other payment that is other than what is exempt under section 10 due to or received by an SSE from his former employer. Profits in lieu of salary is taxable in the hands of employee. So this is for today. We are going to study many more things in the next video. Thank you for listening to me actively. Thank you.